Hi guys, welcome to Edumon classes and my name is Megha. In today's reg class, we'll be starting with the topic of individual taxation. This topic has an approx weightage of 15 to 25% as per the latest AICPA blueprints, and what topic we'll be starting with today is Form 1040. Now here you can see an overview of Form 1040. What all incomes are included, what all deductions are allowed from the income, and how are we calculating taxable income. But before we jump on to that calculation, we have to understand what exactly is Form 1040. Form 1040 है क्या? इसे फाइल कौन करता है? इसे क्यों फाइल करना होता है और कब तक फाइल करना होता है? So to begin with, Form 1040 is filed by any assessee whose income is above the standard deduction level. Having said that, the Form 1040 has certain variations which are filed as per the assessee's needs. To begin with, we've got Form 1040. You've got 1040 easy. As the name suggests, it's an easier version of the form. आपकी income complications कम है, आपकी income heads कम है, आप form 1040 easy use करेंगे, which is an easier version, takes less time. The next form is form 1040X. It's a form that's filed when you have to make amendments in your form 1040. Moving on, we have form 1040SR. This is filed by citizens above the age of 65. Hence called senior citizens, and that's why you've got form 1040SR for their income. The last one that we're talking about is form 1040NR. This is filed by non-resident aliens. Now what do we mean by non-resident aliens? These are individuals who are not residents of the United States but have some sort of an income in this country. It could be a business income, it could be any other income, and if they're required to file their returns, then form 1040NR is their go-to form. Now these are the types of form 1040 that we have. We have to understand what are the different statuses under which we file a return. So those are as follow. You've got single. I'm an unmarried person. I'll be filing my return as a single person. I have certain standard deductions allowed, which is less than a married filing person, but then this is what you're allowed. The next one is married filing jointly and married filing separately. The key difference is the deductions that are allowed to each individual. As a couple, you have the option of filing your return together, giving you a better deduction levels, or you can file it individually. It's purely your choice, depending on which is more beneficial to you as an assessee. The next one is qualified widower. Any person whose spouse has died during the year has the option to file its return as a qualified widower, subject to certain conditions which we will be discussing as we move on into detail with this topic. The last status that we can be using is head of household. A head of household may or may not be married or a widower, but will have certain dependents on his income, which allows him a slightly higher standard deduction rate. Now, the standard deduction rates are purely for your information, as they're not required to be remembered for the exam. These rates, any rate which is adjusted for inflation, which changes by the year, is not required to be remembered, as AICPA questions will not change for it every single year. So, for example, a single person has a standard deduction of 12,400. A married filing jointly will have it of 24,800 USD. Married filing separately again will have 12,400 USD. A qualified widower will have a deduction of 24,800 USD. And a head of household will have it of 18,650, which is slightly higher than that of a single person, but less than what a married filing jointly or a qualified widower will get. Now these are what the statuses you will be filing a return under. What you have to next understand is कि return भरनी कब है. A US financial year will start from 1st of January and goes on till 31st of December. So the due date for a form 1040 is 15th of April. The certain extensions that are allowed to an assessee for his return, which can be up to 6 months, which is 15th October. But what you have to understand is that this extension is for return filing. The income tax still has to be paid by the 15th of April. Having discussed the form 1040, we now move on to the overview of how you disclose your income and expenses in your form 1040. Now these are calculations for your understanding. We begin with gross income, which is broadly any income that an assessee has earned during the year. We classify it into 4 brackets for an ease of understanding, which is your ordinary income, which could be any income earned through wages and salaries and business income. The second one being your portfolio income. आपने एक इन्वेस्टमेंट की थी, अब वो आपके लिए यील्ड्स ला रही है in terms of dividend, in terms of interest, it becomes a part of your gross income. The third head being passive income. Any income for which you're not actually working. You have a rental property, उससे आपको एक रेंट आ रहा है, वो आपकी passive income में आ जाएगा. The last head would be capital gains. Any immovable or movable property sold during the year. अगर वो आपके लिए capital gain लेके आती है, आप उसे अपनी gross income में दिखाएंगे. आगे उसकी deduction मिल जाएगी, but for the timing it forms a part of your gross income. Now, for example, the gross income form 1040 has several schedules for which you show each item of your gross income. So, for example, Schedule B shows your dividend income. Schedule C has any of your other business incomes that are coming through you in terms of your ordinary income. Schedule D has all the capital gains that you've earned during the year. Schedule E could be any other supplemental income, which as we discussed earlier, could be a passive income in terms of rent. Schedule F will show any farming income that the assessee has, which is again clubbed as a part of the gross income. Once you have shown your gross income through the several schedules, you move on to what is allowed from it as a deduction. So the first thing is adjustments. Now adjustments are any expenses that the assessee has incurred during the year for which the IRS allows you to reduce it from your gross income. What you have to understand is every assessee may or may not have these adjustments. It's only if you've made these payments do you get it as a deduction. These could be in the form of any withdrawal from your IRS account. If you've had a penalty, that would be in your adjustments. Any payments that you've made into your IRA account will be shown as a part of your adjustment. Any educator expense, any student loan expenses will be a part of your adjustments. So these are the ones that you've incurred during the year. After making the necessary adjustments to your gross income, you come down to adjusted gross income and you allowed these deductions from your adjusted gross income. Now, standard deduction or itemized deduction, one is allowed to the assessee. As we had discussed, the assessee has either the option of having a standard deduction or taking an itemized deduction for each of the item allowed by the IRS in its income. Now, standard deduction is a bulk figure. It is the lowest possible amount at which no tax is charged. So, for example, if a single person has an income of 12,400, the standard deduction will bring the income down to 0 and there will be no tax liability on the assessee. But if that is not the case, if the assessee does not choose the option of taking a standard deduction, it can go on to itemized deductions. Those are individual items which will be allowed if they exceed a certain limit, and the figures again are not required to be marked up. What you have to understand which deduction is allowed, which rate is applicable, but you need not remember the exact figure as that will change every single year. So some of the example of itemized deduction could be a medical expense or could be any taxes paid by the assessee both to the local or the state government. It could be any charity contribution made by the assessee subject to certain conditions, and could also be any interest expense or any theft or casualty losses only if it is allowed by the government. These all items are subject to certain conditions which have to be fulfilled in order to claim these deductions. After the assessee has taken the standard or the itemized deduction, the next option the assessee has is of qualified business income. In this case, there are certain qualified businesses for which the IRS allows you to take a deduction over and above what you've taken so far. This is again a vast topic which will be done in detail as we move ahead with individual taxation. But for the time being, to understand the calculations, whatever qualified business income amount that is allowed as a deduction will be reduced from here to come at taxable income. Once we've reached taxable income, multiplied by the applicable tax rate for each of the individual statuses, you come at federal income tax. Now this is the tax that has to be paid by the assessee. From it, there are certain credits that are allowed which reduce the tax liability of the assessee. It could be the AMT credit which has been removed and has been replaced by BEAT. BEAT stands for Base Erosion and Anti-Abuse Tax. TCJA has removed AMT and brought in BEAT, and if the assessee has any BEAT credit, that gets reduced from the income tax liability. Once that is done, any other credit the assessee has in terms of any other taxes paid, foreign taxes or any other taxes paid to any other government through any other act, are allowed as credit to reduce the tax liability. Once that is done, you come at self-employment tax. If the assessee has any self-employment income over a threshold limit, they're allowed to pay self-employment tax, and that payment made for any of the self-employment tax is reduced to achieve tax due. This is the tax that has to be paid by the assessee by the due date, and this whole is shown in its form 1040. Thank you.